Hello and welcome to Pura's weekly trading digest. Let's start with a brief overview of what was happening this week in the commodities markets. The first full week of February brought more balance to grains and generally to most softs, except for some second-tier contracts like cotton and orange juice concentrate. The overall supply-demand equation remains more balanced after normalization of weather conditions in Argentina, Brazil, and parts of Southeast Asia previously exposed to impactful typhoons. Corn. USDA reported 1.6 million metric tons of corn inventories were exported during the previous week that ended 2nd February. That was above estimates, led by sales to Japan and some other destinations. Accumulated corn bidding commitments were at 1.05 billion bushels from the weekly data, which reached only 55% of the USDA forecast. Overall, the corn market appears much more balanced now. Soybean. According to the USDA's FAS, weekly soybean export sales were 459,443 metric tons, 38% down from last week and was just 35% of the same week last year, barely over the lower point of range of expectations. Import commitments were 1.754 billion bushels or 88% of USDA's forecast. New crop commitments were just at 903,000 MT or 80% lower than the last year's figure. Bottom line is that soybean market became more sluggish, both in terms of volume of export and demand. Wheat. Wheat futures ended a volatile week lower following the rally to start the week. CBT futures were down 0.1% to 0.3% on technical correction. Spring wheat slid 3 to 6 cents, while USDA's global selling and distribution underpinned a 2.5 MMT production boost, mainly from Australia plus 1.4 MMT and Russia plus 1 MMT. International trade rose by 2 MMT with a 1 MMT orders from China. Cotton. Cotton appeared one of the most dynamic softs of the past week. See diagram below. Weekly data from USDA's FAS had 262,788 round bales (RBs) of cotton inventories sales for the week that ended 2nd February. That was up from 170,000 RBs last week and from 185,000 during the same week last year. China and Turkey were the top buyers. Weekly exports were 210,000 RBs, leaving the accumulated total at 4.8 million. For new crop, USDA had 1.261 million on the books, a 30% lighter volume than this time last season. USDA made essentially no changes to the US domestic cotton supply-demand equilibrium, with just 100,000 barely lighter domestic use. The ending stocks figure now shows at 4.3 million bales. Global S&Ds saw a 1.03 million barley production trim, mainly from India. Orange juice concentrate. Released February 8, 2023 by the US National Agricultural Statistics Service NASS, Agricultural Statistics Board, US Department of Agriculture USDA. Orange production was down 3% from January forecast. All orange forecast for the 2022-2023 season is 2.61 million tons, down 3% from the previous forecast and down a meaningful 25% from the 2021-2022 final consumption. The Florida all-orange forecast at 16 million boxes, 720,000 tons, is down 11 from the previous forecast and down 61% from last season's final utilization. In Florida, early mid-season is forecast at 6 million boxes, approximately 270,000 tons, also significantly down 14% from the previous forecast and down 67% from last season's final utilization. The Florida Valencia orange forecast at 10 million boxes, approximately 450,000 tons, is down 9% from the previous forecast and down a whopping 56% from last season's final utilization. That report was approved on February 8, 2023. Summary and forecast. As major grains seem to have found a point of balance, at least for now, many soft commodity categories increasingly find themselves in disarray. Our midweek special report on chemical fertilizers showed increased price volatility based just on arbitrary news, while the latest data strongly suggests building preconditions for a rally in a second-tier commodity, orange juice concentrate.